Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 5:20 in New York on Monday, 8th day of February 2025, and this is the evening report for gold and silver. Gold prices surged today to a new all-time record high, driven by mounting concerns over President Trump's expanding tariff policies. The most active April contract gained $50.70. That is a 1.76% gain, taking a troy ounce to $2,936.80. Gains in the precious yellow metal occurred in conjunction with a rising U.S. dollar. The dollar gained 0.22%, taking the index to 108.21. When we add the additional $50 to the current leg of this rally that began in the middle of December, gold has risen over 13%. The total gain per ounce has been $341. Considering the fundamental reasons for this recent surge in gold prices, which is an announcement by President Trump to impose a 25% tariff on steel and aluminum imports. This in addition to the 10% tariff he already put on Chinese goods and a 25% imposed tariff on Mexico and Canada, which has currently been delayed for 30 days, could take gold substantially higher. When we look at rallies that occurred last year, the largest one by far occurred in the middle of February and took gold $451 higher, or a total of 22%. If the current rally is equal in size and magnitude to the rally that began in February of last year, that would take gold substantially higher to above $3,160 per troy ounce. Gold is currently trading overseas, up a little bit from the close in New York at $2,939.20. In terms of the momentum of this rally, one way to gauge momentum is to convert our standard candlestick chart into a Heikin-Ashi chart. And as you can see, the body size has really grown over the last few sessions, and we have had the absence of lower wicks for the vast majority of candles since the end of January. This signifies that the rally in place is actually building momentum and gives more credence to the possibility of gold challenging $3,000 per ounce, which is now only $60 from current pricing. When we look at the MACD and compare the signal line to the MACD line, we can see that they have remained about the same distance apart. They would signal a potential top once we saw these two lines converge and cross. To date, we have seen no signs of that happening. When we look at the stochastic oscillator, we see that it has moved above 80. That would indicate the potential for gold to be overbought. However, recent activity has actually seen the percent K and the percent D both flip to the upside to higher ground, currently pegged at around 98%. The last technical study that I want to look at on today's show is simply a moving average ribbon. On this ribbon, we have a 20-day exponential moving average in purple. Green represents a simple 50-day moving average. The blue represents a simple 100-day moving average. And the fact that the shortest term moving average is widening from the longer 50 and 100-day moving average is significant, because that also conveys that the strength of this uptrend has been increasing. The caveat to all the technical indicators and studies that we looked at on today's show is they will typically lag behind real-time data. That being said, it seems obvious that the current rally in gold is far from over. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.